financial reporting, what basically comes to our mind? Most of us, of course, have been told that this is a difficult paper, all right? This paper is not difficult at all. It is the easiest paper that we have in CPA. It has lots of what here? Shortcuts, all right? Low-hanging fruits, where, for example, you'll be told to consolidate two statements here, talk over statements over a group of companies. And we shall be able to see that a group of companies, basically, we have what we call the parent company, and then we have what we call the components here, parent company and subsidiaries. So if, for example, you have a parent company and then you have a subsidiary here, and then you're told to consolidate. To consolidate means what? To put together. So you're told to put together, to consolidate these financial statements. What do? I mean, even before reading the additional information, there are those low-hanging fruits that we shall be seeing. We will be required here to, for example, take the sales of the parent company plus the sales of what are the subsidiary. And then, of course, there will be very easy adjustments that I'll be teaching you. For example, if the parent and the subsidiary did business together, all right, of course, that business is fake. When we talk about parent and subsidiary, we are looking at, for example, a father and a son. If my son today was to come to buy some clothes from my shop, if I give him these clothes, there is no way I'll be able to book that as a sale. And if I book it as a sale, then at the end of the year, when we are consolidating, when we are looking at the parent and subsidiary as one economic entity, then automatically that will be similar to just pushing money from one pocket, in this case, to the other side of your pocket here. All right, same company transactions, because now we're looking at the group as one thing. We shall be looking at so many things under group consolidation, and I can assure you this is a subject that is going to be fun doing. So now I want you to straight away open the course outline that I've been able to send to you, and then straight away you go to Advanced Financial Reporting. It's a PDF document, you can search it. Advanced Financial Reporting. Advanced Financial Reporting. It's on page number 52. Page number 52. Advanced Financial Reporting and Analysis. It's on page number 52. I mean, the moment I understand the group consolidation and then understand group cash flows, because those are very key topics here, I've gotten like 35 to 40% of the AFR marks, group cash flows, group consolidation. Those are key things. Those are key things. Those are key things that I should be able to understand here. Those are key things that I should be able to understand here. So, ladies and gentlemen, then what do I have here? I have great things here for you today. So I want to share my screen, and I hope you've been able to download your syllabus. And I hope now you are on page number 52. Page number 52. And then here I am. All right. All right. So on page number 52, what do we have here? Page number 52. Great. I want to increase the font size like that, yes. So we are told here paper number 14, Advanced Financial Reporting and Analysis. Unit description. This paper is intended to equip the candidate with knowledge, skills, and attitudes that will enable him or her to account for more complex transactions. Prepare advanced financial statements and reports in the private and the public sectors and demonstrate awareness of trends. Awareness of trends in the accounting practice. Like right now we have a new standard called the IFRS what year? IFRS 18, which is going to replace IAS 1. So at the end of the day, we must get a question on these emerging issues. For example, right now, we are so big on what we call integrated reporting, sustainability reports. The IFRS body, which of course comes up with standards, has even been able to come up with these sustainability reports to standards there. So you must be so keen, unlike the financial reporting that you guys did in the intermediate level. Here, in terms of emerging issues, in terms of matters to do with the environment, we have to really get into depths. So you're told here learning outcomes, A candidate who is going to pass this paper should be able to prepare financial statements for subsidiaries, associates, and jointly controlled entities in compliance with International Financial Reporting Standards, IFRS, and International Public Sector Accounting Standards, IPSAS as applicable. Ladies and gentlemen, remember we have got two types of international financial reporting frameworks. So we have a framework for the private sector. A framework for the private sector. In the private sector, what do we do? In the private sector, we use IFRSs, International Financial Reporting Standards. Those are standards that we use for financial reporting in the private sector. So, of course, we used to have the IASs, and indeed, we still have some international accounting standards which are in existence, but of course, they are being replaced gradually. So, at the end of the day, we shall be having what we call IFRSs. So, IFRSs, these are financial reporting standards for the private sector. Like most of you, of course, are working for the private sector. Private sector, we are looking at the profit-making companies. Profit-making companies. Those companies that are out there to do business. They do business and then they make what? They make profit. Those ones here will be using what we call IFRS. I forgot to mention that day one, we're not writing anything. We're just trying to get like an whole overview of the course. And then from the second lesson, we should be able to be on top of things. The first lesson, you just listen. Then after all, you will be able to get, in this case here, this video, which will be playing all through. All right, ladies and gentlemen. So a candidate who passes, we should be able, in this case here, to prepare our financial statements on the basis of IFRSs, and I've been able to clear that IFRSs are for private sector. And then we have what we call IPSAS. IPSAS are International Public Sector Accounting Standards. So International Public Sector Accounting Standards, IPSAS, these are those standards that we use to prepare financial statements for those entities that are public sector. So in talk of public sector, don't just be thinking about government. Public sector also includes what here, like NGOs. When we talk of public sector, we are looking at that sector which is not out there for profit. They don't target, in this case here, to make profit. Their biggest mandate is basically to, do things like poverty alleviation. Who are they doing this poverty alleviation for? It's the public. So all those entities which are not for profit, they're not for profit. The non-governmental organizations, the government organizations, then all of them will be able to prepare their financial reports using what we call International Public Sector Accounting Standards. So what have I said from the very beginning? What I've said from the very beginning, ladies and gentlemen, we are going to have what we call IFRSs, private sector, and then we have IPSAS for public sector. IPSAS for public sector. IPSAS for public sector. All right. Now, ladies and gentlemen, from there, we need to know how to analyze financial statements for public and the private sector. So analysis, remember, it's a key component here. Analysis is a key component here. We should be able to really know how to compute our true ratios here and there for private and public sector. And then we have account for complex accounting transactions. Yes, for instance, we'll be looking at standards like IFRS 9. Yeah, how do we get to account for derivatives, for example? As we shall be seeing, a derivative basically is an embedded financial instrument. Embedded or bed tool. So if, for example, let me just put this into context here. If, for example, ladies and gentlemen, I would want to have a restaurant in Nairobi, and amongst my delicacies, we're going to have chips, the French fries. So what do you know about the price of chips outside here? Chips price will not fluctuate that often. All right. Once we start selling our packet of chips, for example, at 100, we shall stay there for quite a long time because of the competition outside here. So that price will not fluctuate quite a lot. But you see, when you go to the ground, the sellers of potatoes, potato prices will fluctuate quite heavily. At times you get a bag of potatoes going for 5,000. At times you get the price of a bag of potatoes going for 2,000. So that fluctuates quite a lot. Then as a businessman, I may want to cushion myself against against these price fluctuations. So then if that happens, ladies and gentlemen, what should we do? If I would want to take advantage of these derivatives, which are basically being used to assess risk, then what do we do here? We need to cover ourselves. We need to buy, for example, what we should be calling an option, all right? Which will be able to give me, for example, the right, but not an obligation, to buy these potatoes from this farmer at a particular price. So I have a contract with this farmer that come, in this case here, December, then I'll be able to buy these potatoes at, say, 2,000 per bag. All right. So in this case, then I'm being cushioned against what any price increases. So you see now I have an asset. This derivative is an asset because it's going to protect me from making losses. Because by definition, any asset, an asset, of course, is any resource that you have, which is able to generate what here? Cash flows to yourselves. You know, when it cushions me from losses, it is directly generating cash flows to myself, especially if in the future, other persons, my competitors will be buying these potatoes for 5,000. And because I had earlier on had a contract with these farmers, now I'm buying my potatoes at 2,000. The 3,000 I'm saving here, you know, my people, my competitors are buying these potatoes for 5,000, and I'm buying this at 2,000. So I'm able to see a savings there. That saving is a cash flow. So then the question is, how will I be able to do my financial reporting of this kind of an embedded? You know, there are two products, and now we have the cover, which in this case is this particular contract, and then number two, I have in this case the potatoes there underlying. Then when we have this kind of, for example, shall we call them compound instruments, for example, how do we do financial reporting? These are the kind of complex transactions we're talking about. But if you ask me, because I've taught advanced financial reporting for the last 20 years, I can tell you there is nothing complex there. You should not be cheated by that term. This is something that we should be able to really appreciate. So account for complex accounting transactions, we shall be able to do even group consolidation. We will still have what we call complex structures, but we shall be able to really be on top of things here. And then we have here apply ethical standards in accountancy work and practice. Apply ethical standards in accountancy work and practice. Ladies and gentlemen, we are being called upon as an accountants to ensure that we be ethical. I mean, there is a lot of financial reporting, creative accounting going on, where you get, for example, the accountant and the auditors are colluding here to create fictitious profits. Yeah, it has happened in the past severally. Yeah, and we have in this case here shareholders really being hit hard with losses. Because you see, the shareholder here, the prospective shareholder, in most cases, they will rely on the accountant's report to make decisions. So when you do creative accounting, what we call window dressing, you're dressing up your windows here to look so executive, and yet things inside there are not executive. All right. When you do window dressing, then you're going to affect really so many people who will be able to rely on the statements provided by the accountant to make decisions. Remember the case of Enroll. Enroll was a big Enroll, E-N-R-O-N. It was a big organization in the US which was able to employ over 20,000 people every year. Over 20,000 people every year. All right. It was that huge. Telecommunications. It had an energy department. It was a big, big company being run by man and wife. So these guys in this case here got favor. Their revenues were really growing every other day, until they reached a point where they felt like this thing has now become crazy. It's quite hectic to manage it. And then how do we just exit very easily from the scenario? It is to con the public. They brought Arthur and Anderson, AA auditors. Remember, initially we used to have what we call Big Five. We used to have PwC, Ernst & Young, KPMG. In this case here, which other one here am I forgetting? The Big Four, first of all. We talk about the Big Four. Big Four, do you know them? I'm missing out one. I'm missing out one. And then we had in this case here, other than what here, Anderson, I'll be able to remember that, the one that I'm forgetting here very fast, other than Anderson. So other than Anderson came and rescued, in quotes, this Enroll. What they do, they did what we call manipulative financial reporting. So they reported, like, for example, at the end of the year, then we have in this case here, Enroll generating like lots of money in dollars. And then they were able to write down a prospectus, a very nice prospectus showing that Enroll, I mean, is the biggest company. It is in the US. All right. And of course, in this case, here, so many shareholders bought into the idea of Enroll, and they bought so many shares. So after they bought these shares of Enroll, quite a few months down the line, Enroll was not able to pay employees totally. What happened? In this case, of course, the owners here pocketed money, and they never wanted to reinvest this money in the business. All right? Suppliers could not be paid. Enroll, in this case, here became bankrupt. There were so many people who were taken to court, including Arthur and Anderson. And that is why Arthur and Anderson collapsed. That's why we never talk about what year. We never talk about Big Five. Now we are talking about what year? Big Four. Big Four. So we have KPMG. We have KPMG. We have EY. We have in this case here PwC. Now by mentioning that, I've been able to mention the four of them. Ernst & Young, KPMG, PwC. No, there's one still I'm missing here. You guys should be able to remind them while here. The Big Four. The Big Four. I can easily get them here. Which one am I missing out here? All right. You guys should be much better than even myself. Yeah, we have PwC, Deloitte. Yes, I was missing out on Deloitte. We have Deloitte, we have PwC, we have KPMG, PricewaterhouseCoopers, Ernst & Young. Great. So now we have in this case here Big Four. Now we have Big Four, not Big Five, because Anderson went down simply because of what here? I mean, that's fraud. And that is why when we talk of financial reporting, we must have ethics underpinning everything. Because if you guys are not going to be ethical, then the kind of financial reports you're going to be getting outside here will be fraudulent. All right. So you talk of ethical principles, we're going to see that we have an ethical principle covering what here? An ethical principle. Thank you very much, Francis. Ethical principle covering integrity. We must be people of integrity. Integrity means that we are open and straightforward in all our dealings. We shall not be the people who are helping our employers here to evade taxes. All right. We must be people of what here? Integrity. We must be objective. Objectivity means what here? We have to be independent. There are things that these employers will tell you to do at times, and then you tell them, no, I'm professional, this is wrong. You go and do your research there. I will not do what you guys are telling me. I will have to follow this standard. I'll have to follow this tax law. But of course, you're free to go and consult even with your auditors, etc., because we must be ethical. That is what my profession tells me to do. I have to be ethical. All right. Then we have in this case here a framework on confidentiality. An accountant is not supposed to be that kind of a person who speaks too much out there. You know, the current kind of accountants that we have, ladies and gentlemen, are those accountants, for example, if somebody comes borrowing, somebody comes in this case here for an advance at the middle of the month, you can even go discussing with people out there, other people know. As accountants, we're being called upon to always guard against disclosing some confidential data, confidential information that we come across. We should not be party to any inside trading or insider trading. So if, for example, you know that the company I'm working for will be disclosing lots of profits end of the year, which will make the share prices, of course, spike if this is a listed company, and I go and share this information with my wife, and then in this case, my wife buys shares. She's buying these shares private to some information. So it means that your confidential level is not very good, and it means automatically you are unethical because you're going to benefit out of information that it was not to you initially, right? So accountants are being called in this case to be very, very ethical. We have another framework which talks about professional behavior. Professional behavior basically means that we should be able to guard our accountancy profession jealously. How we behave. We should not be having, for example, accountants who are stealing outside there, because when you steal, you're destroying the whole profession here. You're injuring our reputation here. All right. Then, ladies and gentlemen, lastly, in terms of ethical standards, we are being called to ensure that we're engaging in what we call continuous professional development. Continuous professional development, where we study, because there is a whole ethical framework talking about competency, that we have to be competent. It's called professional competence and due care. Professional competence and due care. Professional competence and due care. Great. I wanted to share my handout back. All right. So then, ladies and gentlemen, this is what we have here, being able to look at the outcomes. Then we can now read the content slowly, and please take time to understand this. Accounting for assets and liabilities, you did this. In the intermediate level, we shall be repeating most of them. So we have assets and liabilities as covered in financial accounting, and financial reporting are also relevant here. Leases, including sale and leaseback, and dealers in leased assets. We have deferred tax. We have employee benefits. We have share-based payments, financial assets and liabilities, impairment, hedging, embedded derivatives and disclosures. We have fair value measurement, and then we have impairment of what year? Impairment of assets. And some of these things already have done them. Like deferred tax, you read deferred tax under IAS 12. Yeah. So remember, these asset liabilities, we shall be looking at those standards. For example, we have IAS 2, International Accounting Standard number 2, talking about inventories. And inventory shall always be maintained at cost or net realizable value, whichever is lower. Whichever is lower. We shall be looking at IFRS 13, what we call fair value measurement. So if, for example, you have a motor vehicle in your property, plant, and equipment register. This motor vehicle bought it for 20 million. But something has happened and the value of the motor vehicle now has gone up in the market to say 30 million. Then I have to really increase the value of the motor vehicle in my books. So then this increase from 20 to 30 million, this 10 million, how do we handle it? How do we handle this? That profit. Do we take it, for example, the income statement? Do we take it to OCI, other comprehensive incomes? Where do we take it? If we have, in this case here, an asset that is held for sale, we've marked an asset, in this case, this asset will no longer continue generating profits to us through production. Now we have just taken it up to the market. It's going to be sold in the near future. So if it's held for sale according to IFRS 5, then how do we account for this? All right. So we have, for example, so many standards we shall be looking at. For example, we have IFRS 8, although that comes much later. This chapter 1, we shall be looking at so much in terms of what here, the standards here. Then if you allow Mwalimu, we have preparation of financial statements for interest in other entities where we have subsidiaries, including foreign subsidiaries, piecemeal acquisition, reduction in shareholding, and the disposals, as well as statement of cash flows. So basically, we have great things here. Subsidiaries. So we're looking at IFRS 10. IFRS 10, this will be IFRS 10, IFRS 3. IFRS 3 talks about combinations. IFRS 10 talks about what year? Group consolidations. We also have IAS 28, which talks about what year? The joint ventures, associates, very, very important. Disclosure of interest in other entities, preparation of financial statements for other entities. So financial statements for banks, financial statements for insurance companies, interim financial statements in hyperinflationary economy, including the preparation of financial statements. Then we have financial statements complying with the IFRS for SMEs, like that. And then we have analyzing financial statements, earnings per share. We're going to see who are related parties. Related party disclosure, ladies and gentlemen, related party disclosures. Related parties, you're going to see, like, for example, the components of a group. Your parent is a related party. Your subsidiaries are related parties here. We have associates here. We have key management staff. If, for example, it's RCM, if I'm a director of RCM, automatically I'm a key management staff of RCM. I'm a related party. My family members will be related parties here. Why is this standard very, very critical for accountants? It is in these related parties that there will always be fraud. Related parties, in this case, may lead to fraud quite a lot, because you'll get somebody coming and saying, you know what, I'm a director. And because I'm a director, then I'm going to be using this vehicle of this company anyhowly. All right? That's fraud. That's fraud. So, and that is why we must always have proper disclosures of all our related parties in the notes of the accounts. Who are our related parties? What kind of transactions did you do in the year? All right. What are any, for example, amounts outstanding between yourself and your related parties? If there is debt, is this debt a performing debt, or is it going to be a cancelable debt? We must always disclose all related parties, all of them. Then we have operating segments, and then we have financial organizations and what year reconstructions. Financial organizations and reconstructions, very important, a very important key area. It came last semester. It shall keep on coming every semester. Then, ladies and gentlemen, we have what we are calling the public sector accounting standards, where we have segment reporting. Now, remember this government sector and the NGOs. Segment reporting, same thing we're repeating there, related party disclosures, impairment. We have disclosure of information about the general government sector. We have consolidated financial statements. Then we have investment in associates and joint ventures for the government. And then we have topic number 6, which is the last one, which is a very, very key topic here. We have the conceptual framework and the process of developing new accounting standards. So this is very common in your exams. If, for example, it is IASB, how does it develop new accounting standards? For example, I've just told you that they've released IFRS 18. What is that criteria? What is that methodology? What are the key steps that they have to move on to be able to come up with this final standard? So, for example, there must be a need. They don't just operate in a vacuum. There must be a need for a standard here. Perhaps an old standard like IFRS 4 for insurance. It's not good. It's not being liked. It's not able to transparently give us our financial reports. So in that case here, what do? We have IFRS 17 coming. So there must be complaints from the society here, for example, or through the IASB board, research and development. There must be a need for a new standard. And once there is this need, then what they will do, in this case here, we have the IASB board. They'll sit down. They must come up with a technical committee. They must take this as a project. So they sit down, having now seen a need, and then they draft some kind of guidelines here. All right? They draft something. After they draft, in this case here, something regarding this new IFRS, it will be very important for them to engage stakeholders from the word go. So from the word go, we have gotten this complaint. This particular IFRS is not very good. How do we go about it? How do we go about it? Then automatically what will happen, ladies and gentlemen, is the fact that these stakeholders will respond. When they respond, and in this case here, the IASB board is able to come up with now the summaries from all these, they consolidate this, and then they put down what we call an ED. ED is an exposure draft. Exposure draft. I mean, a draft, what they envisage themselves. I mean, this is what we expect. This standard year will be covering, right? These are the measurements. These are the recognition criteria. Like that. So they come up with an exposure draft. Once they've been able to come up with this exposure draft, again, this is what basically is called proper public participation. The exposure draft, again, will be returned back to who? Will be returned back to the stakeholders. It shall be published on the website, all right? There'll be a lot of, in this case, discussions surrounding, and then they keep on improving, and then at the end of the day, they'll be able to do what year to return this to the public now as a final what year, as a final standard, all right? And even after they return it back as a final standard now to the shareholders, not shareholders, but the stakeholders, then there will be still a lot of monitoring and evaluation. Doesn't stop there. They have a very strong monitoring, M&E, monitoring and evaluation department, which keeps on, in this case here, looking at these standards to see whether there are any gaps, how to address them. They do a lot of training, in this case here, outside here. Yeah. So quite a lot. So we must understand, and I'll be able to give you proper notes. This is just our first lesson. We're just discussing how do we develop this. We're going to discuss this heavily. All right, ladies and gentlemen, from there, we have proposals to revise or update existing standards and recommendations to issue new ones, what we call discussion papers, exposure drafts, etc. Management commentaries, management discussions and analysis, very, very important here. All right. Ladies and gentlemen, nowadays we produce what we call integrated reports. If it's breweries, they will do an integrated report, which is a combined report. So we have financial statements, we have management commentaries, where the chairman, the CEO, CFO will be able to give us highlights about their financial numbers. So the CEO will come and tell us, for example, this year was quite difficult, macroeconomics are not adding up very well. Nevertheless, we saw an increase in revenue. What did we do? Lots of marketing. We had this and this. You mentioned all those key things. They're called MDAs, Management Discussions and Analysis. Quite common in your theory, theoretical part of your paper, MDAs or management commentaries. Then we have what we call corporate governance. The reporting requirements are given to us by the CMA. Ladies and gentlemen, remember, corporate governance is what basically pulls these companies through. Once you have proper corporate governance structures, like if it is RCM, if we have proper governance structures, then RCM will be able to go into places long after, even after the owners have died. So corporate governance, for example, every company must have a board of directors. You can't have a company that's running as a one-man show. One-man show, then you expect it to leave the owners. It can't be like this one man is the chairman of the board, is the CEO, you're doing like everything for the company. No, you're not developing a very strong company, which will be sustainable. No. So the corporate governance, we need a board of directors. The board must have committees. We must have, in this case here, financial reporting, transparency in terms of how we report our finances, etc. So corporate governance is key, and it will be tested in your exams. And I'll be able to cover this very well, given that I'm also a corporate governance expert outside. I've really assisted so many of these listed companies here to get it right in terms of corporate governance. So fortunately for us, we are practitioners. For example, you must be knowing, I've taught you before, I run an auditing firm by Aura and Company, certified public accountants. So whatever I teach you here is very, very practical. It's not a theory thing, like I'm just ramming and in my head. You guys are going to get very good exposure through our classes here. All right, so corporate governance, how do we, the rules and regulations that will be used to run these companies here. Ladies and gentlemen, lastly, we have here, all right, rather, we have the GRI, which are the sustainability reporting framework. GRI works very closely with integrated reporting. And as we're going to see in this GRI, that for sustainability, we'll be reporting on three things, three P's. We shall be reporting on our profitability, we shall be reporting on our planet, and we shall be reporting on our people. So on people reporting, you know, a company is basically a people institution. You have employees, you have suppliers, we have, so many. So are we good to our people? You would want this company to be sustainable. How good are we to our people? Are we that company, for example, that would be paying just 10%, only 10% of our total revenues to employees? We are seeing only directors in this case here growing, and the other employees are even walking their workplaces every morning. No. Planet, what are we doing to our environment? Remember, for this business to be sustainable, we must ensure that we correct the ozone layer. Otherwise, these kind of climatic changes are not very, very good for all of us. We can wake up one day and get ourselves, in this case, submerged underwater here. All right. It has happened before, like the tsunami. Because when you can't even be long dead, long gone. So these are things that we must talk about, ladies and gentlemen. Like the other day, in this financial bill 2024, they introduced eco levy, and the people made lots of noise. Of course, there was not enough public participation, but trust you me, those are not things we can really just sleep comfortably, thinking that everything is well. No, we must put in punitive measures to ensure that whatever is being sold here, which affects our environment negatively, then we are able to recover some money here, and we hope that this money will not go into corruption. To use this, planting trees and doing many, many things out there. It'll be very important for us to really follow that. So we are reporting on the base of three P's. We have the profits, we have in this case here the planet, and then most importantly here is the people. The people. So many guys forget that these are three-legged stool. We have our profits fine, which we want to protect at all costs fine. But again, we have the planet, which may mess your sustainability in future. Then we have the people who remember, like employees, every morning, over 70% of us go to our workplaces with an intention of stealing. We want to steal, yes. So if you don't take care of us, trust you, me, we shall steal the company 100%. So for sustainability, we must take care of our people. We must take care of our planet, as we always think about profits. Again, without profits, then the company will not be sustainable. Without profits, the company will not be sustainable. So we have materiality guidelines for financial reporting. This is quite key, especially in auditing and assurance. Now, ladies and gentlemen, we don't report like every other thing. Or if I go to do auditing of a company, and then I realize that there is, this particular asset was supposed to be 10 million, but these guys are valued at 10 million and 100,000. You see, now depending on the materiality levels, that 100,000 may not be material. Don't go outside here disturbing people. Don't start telling people that you must change this, you must. No. There are materiality guidelines. Touching on assets, on our sales, on our profit, we shall be able to see these materiality guidelines here. And then, ladies and gentlemen, last but not least, we have the concept of legal and ethical issues in financial reporting that I've been able to do that I've been able to discuss there. So what do I expect of you moving forward? Number one, you must work with our learning management system. Our learning management system, ladies and gentlemen, is a huge thing. Most of us are not even using it very well. Like last semester, if you were our student and you did, for example, financial reporting with us, and you were able to mark everything, like complete. When you finish reading a chapter, you must always say complete, complete, complete. And then you are able to complete a whole course. Automatically from our learning management system, you must have gotten a certificate of participation, a certificate of completion, a certificate of completing, studying with us, financial reporting. So those certificates, you should be able to have many. You should be able to have many, but of course, we don't want you to have like after you finish like 18, no. You'll be able to choose as you progress, all right? So that I have a certificate of completion all right, in financial reporting from RCM College. RCM right now is known outside here, all right? So you should be able to choose a few of them. You combine this with your professional qualifications like that. I mean, these ones will be very good because they'll be able to explain like, I mean, this person has done management accounting. You know, customer will give you like just one, as you're giving you a certificate for each paper, not a certificate of achievement. This is a certificate of what year completion. You've completed this. You haven't passed yet. You've just completed studying. All right. I've seen those certificates really helping people out there to penetrate. We don't want you to have like a very small CV. That CV will not be from an RSM student. RSM students normally are known for having what year? A huge CV. Like we can have like even 5 certificates here, right, for each paper. And you can only get that certificate if you're completing your papers on the LMS. You're watching all the videos and you're reading the notes there. So I expect all of us to be in the learning management system. We have already shared a video to show you what you need to do to join that learning management system. It's a great tool. And once you are there, please always ensure like that LMS, if you come back to it like every 3 days, I mean, you come consecutively like day 1, day 2, day 3, then LMS should be able to tell you, hey, you're doing a good job. Because we expect this to be a continuous learning, like even if it's 1 hour or 30 minutes every day, then it'll be very good. So we have the LMS. Then number 2, I would expect all my students here to have our revision kits, which have got questions and what year, questions and answers. That will take you down a little bit by just 1,000 shillings. So it is very important you have those questions and what year, answers for your review. Remember, our duration is quite reduced. We are looking at what year? 3 months exactly. We're looking at 3 months exactly. So 3 months cannot really be just the teacher alone to like deliver everything. Of course, we shall endeavor to deliver most of the things, but we believe with our revision can have my personal number. Of course, you have it even on the WhatsApp. The school number, should you want any assistance, is 0719 525 000. I repeat, 0719 525 000. Otherwise, it has been a great morning. I'm looking forward to meeting you in our next class. And of course, I'll be able to put like chapter 1, the whole of chapter 1, I'll be able to put it in the LMS. I expect to start seeing you guys doing what here, studying. Fortunately, from my end, I'll be able to see what percentage of completion are you at. I'll be able to see these guys watch 3 videos, 4 videos, etc. Otherwise, thank you very much. Have a lovely day. And of course, welcome to RCM. Bye.